Good morning and welcome back to the Opportunistic Trader for Friday, September 28th. I would consider this month end, even though a month end is coming on the weekend. So this is trading month end and quarter end. We've been all over it. We had a little boo-boo yesterday. We were short the S&P. We let it go way longer than we should have. But we really thought there'd be big stock for sale yesterday on the close, which there was, and tonight should be even bigger. And what's going to be exciting about tonight is we're going to be able to give you all the individual or a lot of the individual imbalances in some of the larger names. So hopefully people can take advantage of that going forward. But we were out about $18 on the position, which is extremely more than we would want to be. We're actually profitable right now. We're going to maybe sell, we could look to sell some put options against this position to lock in, some extra pricing on this. But that's all we have going on. It's been kind of slow. I really should have been a little bit more focused over the last couple of days. I haven't been. We've had a good month, a really good month. So I've been coasting sort of into month end. Most of the time I don't do that. I like to press, which we always discuss at the Op Trader, like to press into month end because we're using P&L from the month and really can't get hurt. But since we're fairly new, I want to just put a P on the page, like I always talk about, put a positive month, put it away, and start again next month. Interesting mantra today. Last night, it's been the same kind of close in equities pretty much every day. Stock for sale, market comes in stronger in the morning like we always discuss and then fades away. Maybe today will be the opposite. Maybe we come in weaker and, stay down. And then once they see the imbalances, maybe take the market up a little bit. I think we're kind of flat on the month. Mike, do we have the where we started the month? I think we're around or in the area of flat, even though I don't even think we were up or down more than 1% at any point.
You're talking about the S&P itself?
Yes. Including today?
Yeah, month to date, the candle is like, the monthly candle is like a doji, a spinning top or whatever they call it.
Mike's telling me the S&P is up 20 basis points for the month, which is really not very much. I'd like to get a beginning of the month actual settle because I don't know if that's taking into account the futures. The current time it might be going off cash, but needless to say, it's a zero flat month again. But like we said yesterday, we haven't had a down month since February, so it's been smooth sailing. Going across the board last night was interesting. Asia was higher. Those markets, Nikkei traded at like the monthly high for sure, and maybe I think they took out the yearly high last night on futures and then settled back in, and they're still right on the yearly high. And China's about 4% off the low, and the Hang Seng's about 3% off the low. But our market started off firm last night basis. Those markets, S&P probably up about $4, NASDAQ up about 12, 13. And then as Europe opened, the European markets, which you may have much better information than me because I don't really know why the DAX is down 240 points.
Yeah, I got the color this morning on Italy.
It's down.
So when we get to it.
So it must be Italy affecting Germany because the German DAX is basically down 2%. If we were down 2%, my screen, there would be a little fire coming out of the top of my screen. But,
Oh,
it would be
exactly.
like a little burning like thing. They try to shut it, they try to shut the market down and make sure everyone was okay. But there would
It
be
wouldn't be allowed. It wouldn't be
right,
allowed.
it would be like a burning, a burning flame because we're not allowed to move here. We're a $3,000 instrument that's contained to a $15 range maximum. Yesterday was a little outside that, but again, we're going on 4 to 5 months of not a 1% move. So,
Can I
they
just throw in what actually happened in Italy and
absolutely,
Europe? Okay.
absolutely.
Last night, or while we were sleeping, I would say, the Italian, whatever you call them, parliament, they did a preliminary vote to actually expand their deficit to 2.4% as opposed to what people were expecting as under 2%. Not only is that flying in the face of what Germany and the European Central Bank want from them, they came out saying that we won't be held hostage to the Euro central bankers. We're not going to respond to your threats. And Italian banks dropped about 6.5%. That's 9% in 2 days. The Italian 10-year bonds, I think, went from 2.85% to 3.25%. The euro just collapsed for about an hour. It's stabilized now, but it's lower, and it bled over to the DAX. I mean, everything. There's European contagion. Maybe there's just a barrier between there and here, but that's the driver behind what happened there. Although it probably had no effect on the British pound, but that's an inside joke.
Well, it is. It's probably 130. Actually, it's probably 130. Let's check it out. Yeah, there it is. 130 and a half. The one that's interesting, though, is the euro. Because when we were talking Monday this week, we're like, oh, the euro is breaking out to the upside. It was trading at like 118 and some change. And now I'm looking and it's like the low of the month, basically, at 115. So
I know
they whacked that thing this week. The dollar is beast. It's king. For the moment, everyone was looking the other way, and people got hammered here because I think a lot of longs were put on in the euro up top, and other currencies as well. So I think it's just been a whippy
It's
one.
so bad for Europe compared to, say, Japan. So Japan's currency is weakening, right? The yen is weakening, but they're getting higher highs in their stock market. Meanwhile, Europe's the euro is weakening and their stock market is flat to lower as times are going on. So things aren't very good in Europe, it seems.
Well, DAX is a smooth 4 to 5% lower. So I mean, two of that happened today. So
you're supposed to get a higher stock market when you have a weaker currency, if it's for normal reasons. These guys are having a really big problem, I think, because of the lack of fiscal unity. I mean, you can't tell the Italians to raise or lower taxes. It's all one currency, but it's different. It's different fiscal policies. So Europe's got problems, I think.
Yeah, I mean, they bring out the problems on the down days. You know how that goes. If it was an up day, they'd tell you everything was good. So
Exactly.
a lot of the stuff is after the fact news. Looking at today's straddle, straddle is pricing in about $12, which is high, but it's a quarter end. Today's going to be a really interesting one, and I'm going to try to be there with a lot of information about the reweighting, and what what is going to happen as far as stocks for sale, stocks to buy, index changes, all of that. So it's it's going to be a heavy volume day on the equity side for sure. It'll be interesting at close to 3 o'clock when we get the imbalances, what they actually are, and if they stick. The last couple of nights, it's been 2 to 3 billion for sale, and at the end it comes off a little bit, but there's been stock around for sale. I think people have had a good quarter. They're overweighted Apple for sure. They've got to make maneuvers in there, and some of the other tech names. Amazon is at 2,000, like it always is. It actually traded down to 18 and a quarter. And buyers came in and took it back up. These aren't huge moves, but that stock moves 20 to 40 every day. It's a good trader. Looking at bonds are basically a point off the low of when the Fed came out. I guess the mantra is that the rate rise is out of the way, so they can buy them, and I think maybe the market was positioned.
The flattener is still in effect, I guess.
Yeah,
10 years, but it is now stabilizing above 3% as opposed to 2.95. So that's got to be weighing on the markets somewhere at some point.
Yeah, I mean, I do think the bond yields still go higher. I think there's more movement in here. Maybe they think a correction in the market is coming. I don't know why it's so bid. Again, pointing out yesterday, which a couple of things that we pointed out that were interesting. One was volatility for October is 14.5. The pure volatility is 12.5. So, that's like a 10% up move in volatility, but that's not really that much in vol. All you need is one down day, but they're still pricing in that there'll be some movement in here and maybe there'll be a dislocation. And the one that Mike pointed out when I left yesterday is, we were talking because Elon Musk, our friend, is in a lot of trouble. And yesterday I just touched on that they snuck, hang on one sec. I'm sorry. They snuck Tesla up above 300 quietly, and then yesterday the SEC is going full press on him, and basically him and him alone, and the stock is down $40 pretty much, down 13%.
They want him. Not only are they coming after him, they want him off of the board, out of the company. So that's just it's chaos, I guess.
Well, basically they're saying that he had no financing. He made the whole thing up.
No, he totally did. He did. I mean, that's. Lawyers don't work that way. They can't just have an opinion. They have to prove it. But I mean, to come up with a price like 420, that's a made up number. That's a euphemistic actual police term for pot. And then to have so many convertible bonds out there that went convert on his announcement, he reduced his company's debt by hundreds of millions of dollars.
Right. So he needed the stock above 360, or else he would have had a capital call.
Exactly. So
if we know that here, I'm sure everybody knows that. So he's in a lot of trouble. So it'll be
actually, I have a good report from the credit strategist out on him today. I'll be posting that for everyone to read. A little bit of humor and some facts. The credit strategist, nice publication, and a friend of mine forwarded it to me. I'm going to throw it out there for us.
Yeah. So basically, markets are under some pressure. S&P is under a little bit of pressure, down 10. I would have thought it'd be down more. The DAX just rallied about 40 points since we came on the air. I mean, this thing is flying around, but it's still down 1.75%. And if we were ever down 1.75%, people would be blowing out of here. I mean, they'd be literally blown up. So that's the one thing that I will say is that people are not prepared for any type of movement. And it'll be interesting to see if and when we do have that 1 to 2% day, how everybody handles it, because 2% is 60 handles, and that's a lot. I mean, the way we size our S&P positions for now at a 11 or 12 volatility, to have a day like that is an outside day, and you could really, get hurt or make money, but you have to. You always have to use options. We always discuss this. Use them in a different way, but like I like to use them as just a pure hedge. So like if I'm short futures, I'll buy an upside call just in case, so I'm hedged.
Right.
Obviously, I never want those upside calls to go in the money, because if they go in the money, I'm losing a lot of money. But at least I know that I'm here to play another day and the positions are under control. So it's very important,
Right.
as we always say, to hedge your risk, understand the risk, and be able to, for me, that gives me peace of mind to stay in positions longer and to basically know where
Sleep.
I'm stopped out. Well, yes,
To
sleep.
sleep at night
Well, we
too.
never sleep.
Well,
I
if
never
you're a
sleep.
trader who puts on trades for because if you have an edge as a trader, or you believe you have an edge as a trader, I think like any good poker player or even blackjack player, you need to be able to replicate what you do hundreds and hundreds of times. And the way to prevent yourself from doing that is to not have some cap on your risk on an intraday or overnight position. And I think using options to protect your VAR are a great way to make sure that you're in every hand of poker that's dealt for the next 6 months. So yeah, that's it's better than stops if you want my opinion.
I'll tell you, it's funny you mentioned the term VAR, and to me, I never looked at that. I look at pure risk versus.
No, but you do. I don't. You may not use that term, but I never used that term when I was trading options. We used to actually call it triple M, which was a 3 standard deviation move in the market, and it was called triple M because a floor trader with that badge for the company I worked at, Cooper and F, MMM, he was like, "Hey, what happens if we do this or do that?" And so they named it after him. So VAR is a term that I don't use really much at all. But the point is, it's a drawdown. Can I afford to lose more than 2% on this trade? No, because then I can't keep trading. So yeah, I mean, the term VAR is nebulous.
Yeah, it's VAR, when we used to run our hedge fund to the outside public, and people would come in pre '08 and they would talk about VAR analysis and all of this other stuff, and
Right.
VAR is really a what if scenario. It's like a portfolio testing, or it's kind of like I see these companies do it like Kensho. They're like,
Right.
well, if this happened 6 times,
Right.
well,
They
it's
did
going
it
to happen to
hypothetically.
7.
They didn't actually hedge their VAR. They just said our VAR is this. We're not protected against it, but our VAR is this.
And
Like they weren't buying the calls. They were just saying.
And then what happened was in 2008, the market started cracking down, and nobody had their risk hedged in any way. So, as you said, you were right. They basically showed, oh, this is where the portfolio would be if we had a 2 standard deviation move. Well, we had a lot bigger than that, and their portfolios were hammered.
Right.
So
Their risk management was basically, what are the odds? And that's the point. You put on trades because of statistics and probability, but you cover risk based on your ability to be in the game. So they had VAR, they just didn't cover it. They knew it, they just didn't cover the risk. They didn't buy calls before they went to bed, or puts, I guess, in that case, right?
right. So that was my experience with VAR, and we never used it. And we just did portfolio stress testing straight away. We knew what our risk was at all different levels. So
well, you had down and out numbers too, and you had things, hard floors. Those are things that protect you from VAR risk. I don't think a lot of these firms really did that.
No, no one saw that stuff. And I would say, we were talking about this yesterday, about, portfolio insurance and hedging, and, the unenviable task of being the hedger, or buying puts against the portfolio, or running a short book inside a long hedge fund. These guys don't like to do that, even though it's like you said the other day, it's basis points. Oh, 10 basis. They don't want to lose any basis points because everybody's so far behind the benchmarks that they can't afford to lose
right
against the benchmark. So
hey, you can buy a put for a tick. No, we don't want to spend the money. Because why? Because we're an active fund and we're losing people to passive money. It's it's insane.
Oh yeah.
Anyway,
it's just the underperformance, I think, is a lot of the reason people are underperforming. Today is an interesting one, though. S&P down 12 as we speak on the low tick of the day. I'm shocked a little and happy that it's happening this early. the trade that I discussed with you yesterday and into this morning that isn't one of our better trades is now profitable,
Right.
$4 or $5. So, obviously we're happy about that. I'd like to stay in it long or longer, but, if we could take a profit out of this, I'll be happy. I'm going to put a stop in at the level a little above where we sold it, maybe at 14 on the futures, and leave it in just in case, and then try to ride a little bit of this downside and then cover up. And as far as our scorecard that we keep, I'm not going to count this as a win, even though it's a potential win, only because the amount of heat that we had to take to get this win isn't worth calculating this as a win. Even though we made money and the P&L is there, I'm not.
Well, it's open. It's open equity.
Hey, Larry.
It's open equity.
Larry, we're getting a question from Pete asking, any way you could give a quick example of how to hedge a trade? For example, if you were short S&P at 29.08 right now, how do we use an option?
That's a great question, and that's what I do. So basically, what you would do is you would look to the risks that you would want to take. So if you sold the you sold them at 29.08, you can look. Let's say you only want to lose $15 max on this trade. So you would look for the day, and maybe you would look right now at the 29.20 calls, and they're $2, and it's a vanilla hedge. So you could pay $2 to buy those calls, and it stops you out at 22. No matter what, the most that you're going to lose is $14 because the call is going to be in the money above 20, and you're stopped out. What I like to do a lot of times on this position is I like to be short, let's say, buy these calls and then look for a put on the other side that's trading at $1.52, sell those, and in this case that would be the 90 puts, and that would take me out at 88 on the future. So we would make probably about $20 on that trade, and then the put call would pay for itself. So the call would be paid for by the short put price. So you would take the put, you would sell that, you would take in $2, you would buy the call, the 20 call, at $2, and you would have no cost in that hedge, and your maximum profit on that trade is about $20 or $22, and your maximum, actually, $20, and then your maximum loss would be 12 and change. And I think that that's a great trade, and it's pretty hedged, and then you're able to trade the futures around it. So as the market falls, you might want to buy some back. As it rallies, you're getting out at 20, 22. If the market gets up to 18, you might want to sell a little to reestablish the short that you're going to lose your short at 20. So there's a lot of ways to trade around the position. It's vanilla hedge. I do it pretty much every time when I trade, unless I'm doing a very quick scalp. Right now my position is short 300 and long some out of the money calls against the 300 E-minis. For us, that's it's a decent sized position, but not really. And we're able to we're able to frequent. I don't know if I actually have the S&P up. I don't know if this screen is showing. It may or may not be. So it's not showing anyway. So, the position is there, and the bottom line is that's a good way to hedge, and I do that all the time. And you know what? If you get good movement, you can make a lot of money. It really works well. So that's the answer to that question. You have any thoughts on that, Vince?
No, I think nothing. Nothing.
Well, how do you, when you do it, do you utilize options against a straight future trade, or you just do option on option, or?
I don't generally use options against a straight future trade. That's not because I'm not familiar with it or don't dislike it. I'm an option centric person, so for me, I'm using futures to hedge options. So that's because I'm a long side options player generally. But someone who's got a futures position, I'm very familiar with the structures that people use to hedge their futures. On the production side, whether you're bullish or bearish, fences, three ways collars, strips, Christmas trees, all those things are great ways to mitigate risk, especially if you're having a whippy market moving around. I mean, you just basically described what should be done if you have an opinion on a market and you want to put options on to protect
Well, that's
it.
what I like to do. I mean, I don't do it all the time because a lot of my quick scalps are, don't require that. So I'm in and I'm out quickly. But a position that I'd like to stay in, I like to always hedge
Right.
overnight. And but I have a question. So, like, it's funny because I'm really a short vol player for the most
Right.
part, and you're really a long vol player. And
Yeah.
so, like, my question to you is: so let's say you have, like, let's say today, the market in S&P went out at 29.20, and let's say you had a lot of 15 puts or a lot of 10 puts. What would you do? Would you be buying futures below 10, or how do you, like?
Are you talking about natural gamma or are you talking about expiration deltas?
Well, I'm just talking about position. So let's say your position right now, let's just hypothetically say you were just naked long 15 puts. Okay. You bought them yesterday at $3 or $2.
Okay.
And now the market's trading down at 08. Are you buying in futures against
absolutely.
that?
Absolutely. For me, it's for me, not even looking directionally. It has to do with break even and theta, and it's very more option Greek oriented. But in terms of feel for the market, something I think that you're implying, it's kind of interesting because this is something that needs a good feel for the market. If let's say I'm long these puts and the puts are now in the money, and now my risk will say that I'm short, let's say, 85 E-minis. I will buy at least half. I don't always buy all to flatten my delta out, and that's because I trade ranges that way. So if I come in with a flat delta and then the market drops, and let's say my puts are hedged, right? Then the market drops as you described. Now I'm short 85, or let's make it 90. I'm going to buy 45 because if we go back up, I'm going to make money. And if we go down, I'm going to make money. So I'm keeping half of my short on. It's kind of a semi-parlay type of play. Does that answer your question?
Yeah, no, it's kind of the way I would look to do it as well. You want to take at least half in. This way you have positive P&L. You could use the other half, as you would say, for your lotto ticket or whatever, if you feel like the market's still going to break in that direction. But at least you have a profit to work with. I mean,
the position is definitely paid for itself for that day, so to speak.
And these markets are very different than any markets that we've ever seen. I mean, I'm gonna date myself, but back in the day, when we were trading on the floor and when there was really trading, you would have the ability to really capitalize. I mean, on a day like today, it wouldn't be tick, tick, tick. Like, I'm watching the market and we went down to 08, which is $1 higher than the low of the move from 2 days ago. And we just sat there, and then all of a sudden you look up and the NASDAQ rallies 15 and the S&P rallies right now about $5 off the low, and the whole move is $8. So, down 13, it gets a little tenuous. People are like, oh, it could go here. But now we've retraced almost half the down move per se.
Right.
And now everybody's fine. So, it's always good to take profits in a tape like this. You'll know in a higher volatility tape, which everybody looks at, if we have 20 volatility, that the market's going to be whipping all over the place. At an 11 or 12 or 13 volatility, you know the market can't move that much because the vol is telling you that, and the option prices are telling you that.
Right,
So,
and that's a good point. I don't really think a lot of people plug into, but not only is the volatility a good indicator, the fact that the volatility is trading at that level is self-fulfilling prophecy, meaning guys like me that are choking on long volatility when it's low will sell high and buy low more aggressively, can just squeezing and throttling the range even more. So weak hands, generally speaking, weaker hands are long options. So when you see, in terms of how deep your pockets are, when you see a low straddle, that means guys that are lesser capitalized are going to make it even worse by selling more aggressively when it rallies and buying more aggressively when it dips. So the volatility does become self-fulfilling, if not worse. And there's definitely a feedback circle to what you're saying that makes these short-term options more valid as an indicator of the range for the day than even normal.
right. But I always felt as a trader, like I'm a trader's trader. Like I come in here and I try to make a lot of trades, and I'm looking at different markets. And for me, it was always, if I was short, premium, not net options on balance, but really short premium or spreads and whatnot, it would benefit me because if we didn't move, there wouldn't be any trading, but at least I'd have decay. If I was long options and we didn't move, I'd have decay and no trading. So it was almost like it was like a double-edged sword, and it became apparent to me that if there was trading, I could always make back whatever the vol expansion is, and as long as I didn't do volatility that lasted more than a day to, at that point, a week, we would go 4 days.
I totally agree with that.
You
make money one way with your long options if the market moves, volatility, I should say. You make money two ways if you're short options, if the market moves away from your directional opinion or if the market goes sideways. So in 2/3 of the situations, you're going to lose money if you're long options. And that's been a winning mentality to have forever if you know how to manage risk. And for the last 10 years, it's also been a winning way, even if you didn't know how to manage risk, because they've just sat on volatility, for whatever reason. But yeah, you're getting a dividend every day if the market doesn't move.
Yeah. I mean, that's what it felt like. And when the market did move, there was so much good trading that you could, make up the money.
It was the cover charge. It was the cover charge for a good day of trading. We used to say one of the things we were taught, and I think it's almost like you said it, although you probably wouldn't use the terminology, was a little negative gamma is good for the soul. Point being is if you're short options, don't.
It makes,
right?
It makes
if you're short,
it makes you old.
Right? No, but it keeps. It's like a little negative gamma. Oh, I lose money if the market moves. You know what? But you'll pay attention. You'll be that much better of a trader as the market moves, and you'll probably trade it back.
That's why
it's kind of like a door. It's kind of like a cover charge for a good day.
That's why you look so good, and I'm
I don't know about
aged.
that.
Hey, Larry, quick question.
Yeah.
Being the last day of the quarter, is there typically more market on open business, or is it market on close with people kind of on the equity side?
Well, there's really not a lot market on open. What there is there's a lot of VWAP and there's a lot of MOC. I think, anyone that really needs to do stuff has been doing it over the last 3 days. Today is just the culmination. So the imbalances that we've seen over the last few days could be the fact that a lot of people are taking care of this beforehand. Again, we're not going to know that till later. But I would say not a lot on the opening, a lot during the day, and then potentially a lot on the close. And today, I think there's some index changes. I know they're moving around some of these technology stocks and they're putting them in different buckets. So I think maybe there'll be stuff from that and just general reweightings for quarter end positioning. So to answer the question, I'd say a lot during the day, VWAP, through the day, and then, bigger on the close. Depending on, no one really marks their position, per se, but they all do. So it depends on the marks that they want and they need in particular securities. So it'll be interesting. I don't think there's a lot to tell on the opening, but through the day and definitely on the close. So it should be an interesting quarter end to up quarter. I don't think we're up too much this quarter, but somehow the S&P is up 8 or 9 for the year, and we're coming into October, the home stretch of the year. I'm definitely not touching on politics in any way because we went in that direction yesterday, and we promised we would never do that, so we're not doing that. But the midterm elections are coming, and I think that could be an outlier. But other than that, it should be an interesting day. Looking at the stocks, we touched on Tesla getting smoked. It's down 37.5 right now. Technology in general doesn't look that weak. The Nasdaq's down 30, but I don't see stuff down that much. Amazon's only down 10, Google down 4, Netflix down 2. These are all very small 40 and 50 basis point moves, and the DAX just continues to get smashed. It's now down 2%.
Larry, Canadian dollar. Sorry, Canadian dollar. Don't know what's going on there, but it's at 129.80 now. It just fell out of bed.
I don't see the news. It must be something.
They did. Deal on. They're meeting again. Trump needs a deflection. They're meeting again.
I don't know. Maybe did they have GDP out or something today?
No, it wasn't economic data because you're right. It happened after that. I'm waiting to see the headlines.
Well, what's interesting? I'm looking at the screen, and I was actually going to touch on the euro again, and I was saying how the dollar was rocketing, and then I looked at that, and I'm like, that just doesn't look right. So
right. Well, the metals upticked a little bit, and I was like, the euro's still on its lows. The yen isn't doing anything. Oh, look at the Canadian dollar. What the heck is going on there? Anyway.
No, that was a good spot, Vince. You're on your game. You're on your game.
We don't have the news to go with it. They did have personal income, but it certainly wasn't.
No, I'm sure.
Wait, let's look. We should probably look at the U.S. dollar, the Mexican pair, because this could be, if it's trade related, it's trade related, So let's see if there's anything going on. There's some volatility on the hour, but no real movement in the.
What it actually was probably GDP came in stronger, came in month over month because the move did happen at 8:30. GDP came in at 0.2 versus 0.1 expectation. Year over year, 2.4 versus 2.2. So
there you go.
And the move
did
happen at 8:30 when it came.
Wow.
It's not deal related because I was going to say S&P didn't move.
That's shocking. I would fade that. I don't know, but maybe it's a pre-deal movement.
Well, a lot of people are probably playing the Canadian dollar now, so now I guess anything could spook them. Trudeau sneezes, GDP comes in. Now you have different reasons for people panicking for different markets.
For sure. So anyway, that's sort of the wrap up here. What's the schedule, Mike? You didn't hand it to me. I know we have Mark Fisher.
Yeah, so
today.
At 10 o'clock, we're going to have you come back on, or 10:30. We'll actually update everybody on that time. But 10 or 10:30, we're going to have Larry come back on talking about mean reversion trading. Then Mark Fisher is going to come back on at 12, talk about the markets. 1 o'clock, we have Brad Feinberg talking about fantasy football. He won $1 million in the FanDuel the weekly prize in 2016, actually for the full year. And then at 2 o'clock, we're going to have Tony Greer come on, give a recap of the week. And so that'll be 2 o'clock. And then on top of that, we're going to have some different replays from some of the popular webinars throughout the week at different times. So stay tuned. And, there could be a few changes to that schedule as well. Some people might come on last minute.
Okay, well, I appreciate it. Vince, I appreciate you. Thank you so much for joining me. I appreciate you coming on every day this week, and your new program is very,
We're working
very
on
good.
that. We're working on that. But thank you for I guess sponsoring is the way to look at it. That's what you're doing there.
Yeah,
I appreciate it.
Yeah, no problem, and I look forward to it expanding. I hear you may bring someone on with you, so I think I'm a little jealous actually. because I thought it was just me and you.
No. I was going to ask you, but there's only so much you could talk about gold. I need someone a little bit, less disciplined to come on with me.
It's all good.
It's all good. Oh, PCE just came out. It came out at 0. That might be why we're getting a little bit of a bounce in the ES, although I don't know why.
Yeah,
but
the stocks. I'm looking at the stocks. On a quick note, they're not down that much, for the market to be down here. I will tell you, though, the DAX is just getting annihilated. It's down 242 points and 1.95%. So you got to keep an eye on that. Our spoos don't care. At some point, they will. But today on the close is going to be really, really good opportunity, I think. So hopefully we'll be able to help the members of our chat and go out with some really good information. So I'm gonna head off now and watch the markets and be in the chat, and I'll see you in the chat, and we'll touch base later. And I'm coming on at between 10 and 10:30, and we'll go from there.